Need a checkup? This is the IssuesWatch podcast. Hello and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm an assurance principal at Clifton Larson Allen. And back with me today is Dr. Frank Boudelet, Emeritus Partner at Witham and my co-presenter for the Society's Law and Ethics webinar. Welcome back, Frank.
Glad to be here, Brad.
Okay. This episode qualifies for Nano CPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. Quick disclaimer, the views and statements expressed herein are our own and not necessarily those of NJCPA, CLA, or Witham. Okay, Frank, so tax season, busy season, or whatever you want to say is over. What should people be doing now, you think?
They should be concerned with the health of their firm and themselves. Let me see, Brad, let me check you out to make sure you're good to go. No heart.
If I only had a brain.
Oh boy.
Put 'em up. So what should they be focusing on, though, as it relates to their health?
I think they should worry about their peer review.
Okay.
So their financial statements, you have your peer review coming up this year, so I think we should talk about some items, some quick hits on things that they should be looking forward for as they're preparing their financial statements for this year.
Right, and you know, there's so many different aspects of the health of a firm, of course, financial, clients, everything. But this is something that people tend to put on the back burner. Every 3 years, so let's not worry about it.
Right. And your financial statements are very important because if you fail your peer review, you probably can't issue financial statements going forward.
Right.
So.
All right, so what kind of items should we be focusing on?
Why don't we talk about audits first?
Okay.
Okay, so some of the tips on audits that you should be concerned about and start looking for, and this could be like a checklist for you, is so what we're finding on peer reviews, what the ISCPA has found, failure to appropriately document your planning procedures, which includes risk assessment. Make sure you're documenting risk assessment appropriately. Make sure you're looking at planning analytics. Understanding IT, which is big right now, documenting the IT, what the firm, your client is using. Even if it's QuickBooks, they need to document that. Consideration of going concern. Even if there is no going concern issue, you should be documenting that there's no going concern issues. That's critical. Failure to properly support and document the assessed level of risk. So again, setting your control risk, if it's below maximum, you should have tested internal controls. Otherwise, you should be setting your control risk at maximum. Failure to properly identify and document relevant risk controls on IT. Failure to appropriately address fraud considerations related to revenue. Revenue is always going to be a fraud risk. You must document that appropriately, or take that into consideration. Failure to obtain appropriate management representation letter. Update the letter to include representations for all professional standards and all periods that are covered by the audit. Make sure you're dating it appropriately. It should match your audit opinion date. You have certain requirements that are necessary in the rep letter. Have to have that as well. Other things, failure to communicate and document required communications with those charged with governance. A lot of practitioners forget about that. They don't document it. If they do it orally, make sure you document you discussed it orally. It has to be in your work papers.
And dated similar to the report.
And dated similar to the report, right. And you should be doing that communication before you start the audit and then at the end of the audit.
Right.
Failure to include audit documentation that contains sufficient competent evidence to support your opinion. Again, that's a big one that the ASP will hit you on, or peer reviews will hit you on, that you didn't do enough work to support your opinion. You might say, I did enough testing. Well, how do we know you did enough testing unless you did your sample size? And even if you over-audit, people say, well, I over-audited. Yeah, but the fear is that you under-audit also. There's a potential. So you got to make sure you're documenting that appropriately.
It's like absolutes.
That's right. Failure to adhere to established quality control policies and procedures, so incorrectly using third-party practice aids. So if you're saying using PPC or CCH, use them fully. Don't cut pieces out and say, I didn't need that part, because that could be not filling them out completely. You could miss something that you should have documented. I find that if you use PPC fully and every single checklist, you're pretty much 90% of the way
a lot
there.
of checklists, though.
A lot of checklists, but
A
you're
lot of
90%
checklists,
there. And using out-of-date materials. Make sure your PPC is updated. Don't use last year's. Just update it. They're not that expensive. So that's on the audit side, Brad.
So two things I noticed,
Yes.
I've seen and heard, I'll mention real quick.
Mm-hmm.
The IT is a big one. And I'm not saying, yes, we have to document and document better, but I'm seeing certain people that are more inclined to really focus on this IT stuff. And you could have a peer reviewer come in and really hit you hard on the IT stuff
Yes.
and think that you should have engaged a specialist. So I'm seeing people really starting to focus on it, and I think maybe over-focusing on it.
True.
But what's going to happen is some of these firms are just going to be taking the PPC checklist going, Frank said prepare it, and just go through it and not really consider it. The other thing I found very interesting, I didn't know you could do this. Did you use engagement? This is not a sales pitch for engagement. Did you use engagement when you were working?
Yes.
Did you know, in your opinion, you could have the code there that says report date. You go into the rep letter, you put the code there that says, in the Word document, it says report date. Down below where it says the date of report, you put the report date.
Sure.
And it marries up with the date that you put in the binder.
Oh.
So when you put that date in the binder itself, outside the work papers, this Word document goes and grabs that date, and all your dates will be the same then.
That's why you should use an automated system.
Yes, so if you have a question about that, reach out to us. Or if you're using engagement, again, this is not a sales pitch for them, but I've been using engagement for 20 years. I never knew that.
I didn't know that, and I don't use it anymore.
Thank God that we did that merger. That's where we found out. All right, let's talk about reviews. So very similar comments that you have in audits. You're going to hear very overarching statements of failure to prepare reports in accordance with professional standards. Peer reviewers love when something new comes out.
Right.
And nothing's new come out with the reports yet, particularly. But we love it because we know we're going to catch people that didn't update their reports.
Plagiarize. It's in the standard, plagiarize it.
And
Use it exactly as written.
So I prefer not to break the law.
Well, but you're...
I know, but I say beg, borrow, and steal.
Okay.
Not that stealing isn't breaking the law either, right? But beg, borrow, and steal. Use from other places, right?
Yeah.
Failure to mention that substantially all disclosures were omitted. And remember, we're talking about compilations now.
Right.
Failure to report on all periods presented in the finance statements. This is very common. When we went to 842 in our office, we did not feel like dealing with comparative and the wacky look of comparative. We went to single year.
Right.
Now we're 1 year past 842. Now we got comparative again.
And you're copying the same report from last year and updates the date because it updates the date in engagement
automatically. And there's only one date in there.
One date in there, yeah.
And, you know, and it doesn't say years, so I'm going through, and this is the fun stuff I'm picking up on, right?
Yeah, that's all good points, though.
Failure to note the lack of independence, if there is a lack of independence. Failure to identify all non-attest services that are being provided.
Yes.
Now, non-attest, we know compilation is not an attest engagement, but we have to apply similar concepts because if you're not independent, you have to indicate it. So what's non-attest? Attests are services that you provide that are not part of the attest services. Preparation of financial statements, preparation of tax returns, helping with their depreciation calculation, helping them with tax accrual, cash accrual conversions.
And that's a big one, and we'll be talking about it some more.
Yep. Okay, let's talk about the reviews. Failure to obtain appropriate management representation letters.
Got to have one on a review.
Have to, okay? Update reports in conformity with applicable professional standards. So you said it, I said it on the comps, now we're saying the reviews.
Yep.
Failure to cover all periods all periods or the correct periods, okay? Similar to the compilation. Include a statement that indicates that at a minimum, no assurance is provided on the financial statements, okay? One of the things they changed, you pointed it out to me too and reminded me, in the initial template that came out, they had the titles for the paragraphs.
Yes.
They got rid of that
rid
now.
of that. You don't need those anymore.
Because you'll know when you see that people have the titles, 90% of the people didn't go through and say, I like them in there. No, they didn't look at most recent templates. Which one?
Preparation. Want to talk about preparation engagements? Sure. Preparation engagements, you have to have an engagement letter for the prep because that determines if you're doing a compilation of preparation engagement. Make sure that you're disclosing that there's substantially all disclosure. Remember, this preparation engagement has no report with it. It's just a plain paper statement. But you still have to, if you don't have disclosures, you need to put on there all disclosures omitted. That's a big one, and I've seen firms get dinged on peer review. I had a firm that did 57 preparation engagements and 2 comps and 2 reviews. And the preparation engagement looked at it and they were all wrong.
Because they said no assurance provided, but it doesn't say.
Right. It doesn't say that's all disclosure omitted. So that's a key for preparation engagements. And again, what Brad just said about putting there's no assurance, that's a big key too for preparation engagements. So let's move on, Brad.
Yeah, I just have a couple items here, and because I'm watching the time, I just want to hit on the statement of quality control. The one thing that I've seen, I remember Ron Matan when he would do, that was his part of the peer review that he would do. You constantly find the failure to update the quality control document.
Yes.
Or we had somebody that just took the PPC materials and just filled their name on the top and handed it to us.
Yeah.
It's like, no, you can't do that.
Especially if you have changes within your organization and you have different people doing different things, or you're growing, make sure you update that document it has to mimic how you actually practice.
Now, if they think that this is difficult,
right?
Trying to keep up with this, was it squash 8, squash 9, then 2?
Right.
If they think that this was difficult to keep up with, when the quality management standards come out,
oh, that's going to be crazy.
I don't know how they're going to be able to keep up with it.
I don't know how they'll do it.
I know that firms, it's effective for next year.
Yes.
And I know firms started getting ready for it this year.
Yeah, that's why.
Before even,
Yeah.
right?
You know, I was just thought about this. Maybe, if your peer review is next year, maybe you want to have an accelerated peer review and get it done now. Then you have 3 years from now, so you can have time to bring in the management systems. Just a thought.
You tell people to do their peer review early.
Do your peer review early. Give me a call.
All right, I'm just going to say real quick, there's a lot of areas as it relates to accounting, and maybe we can save that for another time and go over the accounting ones, because there's a great list here of items.
Okay.
So it'll be another episode we'll do then.
Okay, we have another one.
Part 2, part 2.
Job security for me.
Here we go. All right. A few closing notes. To learn more about what we discussed today, attend the Society's June 20th webinar, Avoiding Deficiencies in Peer Reviews, Focus on Engagement Quality. Through the NJCPA, you can also register for the AICPA webinar, Are You Ready for Your Peer Review? It's being held on May 23rd and additional dates. Also, Frank and I will be presenting a 3-hour A&A update webinar on May 10th with replay on May 17th. Get info on these and more at njcpa.org/events. And of course, be sure to join the Society's Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. And Dr. Frank, as usual, thanks for joining me.
Glad to be here, Brad, and go see a doctor.
I will.
A real doctor.
And thank you for watching or listening.